Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 18th of January. So this week is the week that Mr. Biden takes office, and obviously at the start of the week we've got the US markets closed with Martin Luther King Day as well. From a macroeconomic perspective, I think the focus is squarely still on the US and China, with international relations with China being very much the focus there. From the US dollar perspective, the US dollar is being seen as a bit of a safe haven over recent days, and over the past week or so now we've seen quite a bit of strength coming into the US dollar, so it will be interesting to see how that continues and how that fares going forward. So before we get into the markets, just want to remind you of Wednesday's live trading session. So this runs for about half an hour, 45 minutes on Wednesday mornings, 9 o'clock UK time. You can get details for the link to that in the description below today's newsletter. So let's come across to the markets here. And if we take a look at the Dow first of all, these index markets have pulled back quite nicely now, and you can see the recent trend if we just sort of zoom into this over the past sort of few trading sessions. You can see that the market now has sort of pulled back into back into the moving average zone here on the daily time frame, and just looking back over the course of this price action and the course of this trend, it's a zone, it's an area where we might start to see some sort of evidence of support coming in, particularly if the long trend here is likely to continue. Now, right within this zone here, we've got that key 30,000 level in here, and that's just around the highs here of the previous resistance. So at the moment, it's early trade at the moment, but you can see that we're sort of finding an early bit of buying and stability coming into these markets, and I think it's certainly an area where it would be worthwhile keeping an eye on. If we zoom into this on the 4-hour time frame, you can see the price rotation at the moment back into this sort of area, and you can see at the moment we've got around 30,000, sort of 600, 680, this area here, which is a good technical trading level that we've used for intraday trading. You can see that the market now has found resistance here and now starting to see some weakness off it. For this trend to continue, we're going to see some further weakness, and well, the next levels here are 30,200 and then that key 30,000 level down here, and there's some fairly decent size trading windows to the short side to get down here. So I think we've got a key decision point here. You know, we've seen on the daily time frame, if this market sort of takes much lower from where it is at the moment, if it breaks below that current low point on the daily chart, then we're likely to see a continuation to the short side. If we can find support in this area and start to break above the highs, then we may well see a bit of a more positive action sort of coming in. But note that there is some significant resistance above price for the markets to get through, and we've got 30,680 and 30,750 as intraday levels to get through before the markets can make any progress. So my preference here is for opportunities to the short side, particularly as things are setting up that way on these lower time frames. But we've got that trigger point there on the daily to help with that decision point. If we come and have a look at the euro dollar, now euro dollar here was a market that we discussed for a few weeks now. In actual fact, we've been from last week we were looking for this move down to the 120 level, a retracement back on the euro to 120, and this is in really a dollar play. So the strength in the US dollar pushing the euro down, and you can see that we've got the break finally of the 121 150 area, and now the market's sort of halfway through that trading window. So I still see continued weakness in the euro. I still see that this may, the trade at the moment is for moves down towards that 120, and that's certainly the area that we're looking at the moment. Across the time frames, 4-hour time frames, lower time frames, we've got well established short trends in play at the moment, and good indications of continued weakness. Now if we come over to the gold market and take a look at gold, So we've got our daily chart here. It's a little bit sort of on the messy side, but we can start to see a bit more detail as to what's happening within this choppy price action. We've got a key structure point here at 1,800, and you can see here that from a number of different analysis levels we've got a conclusion at 1.8 here. At the moment, price has bounced off this, and now we've got a retracement back up into 1.826. So you've got this level through here again, which is another structure point, and it's midway between the 1.8 and the 1.850. So we've got three key structure points here and a very messy retracement. So the question is, well, what's the play going to be for the next move? I mean, either direction here. If we get a move up to 1.850 or get a move down to 1.800, they're very significant moves here for gold, and some very decent sort of size plays as well on this market. So again, if we just start to come down to the 4-hour chart, we can see the price action here, and certainly the way that we're looking at this is that we've got the three levels, the three structure points within price action, and if we get a break underneath that 1.826, then I think we'll see the 1800, or that slightly higher level here at 1810. As you can see back here, there's been some previous support around that area, so 1810 just being a bit more of a conservative target area. That I see that being hit, and that would be the play that we're looking at. You can see that this level here has been quite well tested and quite well supported over time. So if that gets actually taken out, I see the lower level hitting fairly quickly. However, if we can find support in here, and there is evidence that the market may well find a bit of support in here with the rising divergence here, again, as the market's testing this level, if we do find support, then I think 1850 is going to be the next test point on the high side, and I think there's some fairly easy moves here either way. So I think we're coming up to a key decision point on gold, and depending upon which way the decision is decided at 1.826, I think will be the intraday play here that we'll be looking at. So there's a few markets there that we're keeping a close eye on in the trading room at the beginning of this week. I certainly hope it helps, and look forward to speaking to you on Wednesday. Bye for now.